There is rarely ever a dull day in the markets, and this is for good reason. Of course, it is to capture attention. Even on days where there isn't much happening, there is a news story, a news narrative made about something. Today is no different to that. So let's dive into what that narrative could be, how to unpack it, and what we see moving forward in the short term and the long term. Make sure you hit that like button and subscribe to the channel. Plenty more great macro cycle analysis coming up for you every single day apart from weekends, like we had just a few days ago where we looked at the US dollar and its relationship with BTC. Really important stuff, so do make sure you have hit that subscribe button. Links in the top of the video description for our free crypto and economic report as well, which you should have received by now as it went out on Wednesday. All right, guys, let's start this journey with the stock markets. Big stuff for the NASDAQ again, hitting a new high for 2023. But before we get too ahead of ourselves, the SP500 is just finding a little bit of overhead resistance here at 41.55. This is not surprising if you've been following our channel for months now. This has been the resistance level 50% of the bear market trend. So the top to the bottom, huge volume coming in at these lows, huge volume at the banking crisis low, almost dead on the other 50% level as well on the way up. You can see that it hit and then jumped above that level on good solid volume. So it's no surprises that we're still seeing a bit of a hold up here because this is a very significant level for the market to overcome. The good news for this is we're not seeing further downside or major downside, anything that's going to collapse the market past significant support at around 3,800 or even the cycle low that is currently sitting at 3,500. So far, this has all been relatively stable environment for the S&P 500, and that's also showing up on the VIX. So we've been covering the VIX as another indicator for the start of a bull market and bear market bottoms and tops. It's a great indicator to let us know what the sentiment is out there. So what we've seen recently is the market fall under this zone of 17. And so we know that anything under this 17 zone is the likely start of a bull market, or at least in that sort of bull market territory, the territory where the bears are losing control. This is at the beginning of the move underneath this level. And this is where we currently sit. We're at the beginning of this move. Like you can see here as well, early 2021, we know that 2021 was that bull market year. Eventually it rolls over. You get the peak of a bull market and then the collapse. And this is shown on the VIX here with the volatility creeping in. Right now, we've seen lower highs, the volatility is dropping off, and we are slowly grinding our way underneath the 17 level, meaning the volatility is reducing. And it is possible that we start this bull market as we continue to break higher and higher. You can see it happens time and time again through the volatility index where you get these lower lows forming, lower highs forming, lower lows, lower highs. You get some quick breakouts with that form significant lows in the S&P 500 and the NASDAQ and so on. But then it starts to roll over and you get this nice trend back underneath the 17 level. It's no different this time. We had the 2020 pandemic low, the market dropped off and eventually it rolled back under the 17, which led to that continued increase to the upside. Moving over to the NASDAQ, we've just had a new highest daily close for 2023. This is on the weekly chart as we have one more day left in the trading week. So all signs are pointing rather positively to the NASDAQ. Yes, there are some signs that the market is slowing down, as you can see here with the higher lows forming higher highs as well, but you're getting that ascending wedge as we move into the resistance levels here at 13,600. But we've had some pretty significant volume coming in at these lows, more significant volume at the lows. So trying to weigh up the differences here with the weakening to the upside and the strong support at the lows, eventually we will have some rollover, whether it's here or whether it's above that level. Yet to be decided. We are working our way higher now, but not each of the indicators are equal. If we're looking at the macro, you have stronger macro bases forming than daily weakness. This isn't to say that we're going to roll over tomorrow or the next day. We could continue up and actually break out of this resistance level. The difference to understand is that you can have shorter term weakness, but you still have longer term macro support in the background. So you are going to get some sort of rollovers eventually, like we've seen over the last few months. It's just a natural market movement. The main thing to note is, where are the significant macro support structures? What would invalidate the entire picture here? So far, so good. The same signals and indicators go for all markets. Bitcoin, no different. We've had the lows form, 15 to 18,000. We had the banking crisis low here at $19,500 to $20,000 with a huge jump that took out the double top at 25K. Now the market has gone on a bit of a consolidation. Is it redistribution before we drop lower? Is it reaccumulation before we test and maybe potentially go higher? Yet to be seen. We have to wait for those breakout points. But what is actually happening is some sort of consolidation. A pause in the price consolidation is exactly what markets need. We follow the fear and greed index to understand what the market sentiment is out there. And we can see that this has been on a downtrend now since putting in those peaks at around 64, even earlier or mid-April, hitting around 68 to 69. You can see the trend has slowly been down, which is just resetting the heat out of the market. I don't think anyone can argue that there was a lot of heat in the market and basically went bananas with Peppy coins and all the meme coins, of course. People making a lot of money, everyone getting excited, and then people buying in too late, and of course, markets dumping on them. So we need time to reset the structure here, reset the price structure, and reset the market sentiment, that hype that has been in the market. So take this back with a little more data in here. This is exactly what we've been waiting for. We need to see the reset here. It's gotten too hot, a little too quick. Nothing as quick as what happened in 2019, where we just shot straight up to extreme greed. Bitcoin going from 4K on the breakout to $14,000. Nonetheless, we do need to see a reset, and eventually we should see some sort of movement back under 50, probably back under 40 would be a better area to get this reset going on. So we saw that happen with the banking crisis low here, where it only just basically got to the low 30s. So these are the typical market movements that have to happen in order for the market to reset, so we can prepare for the next move in crypto and the stock markets, which leads us over to what has been happening with the US dollar, the old collapse in the USD. These were the huge news headlines, like we covered here on the channel back over a month ago. The headlines were how everyone was leaving the US dollar. China, you had France in here, you had the Middle East, you had Africa, you name it. There was a headline about a country getting off the US dollar and trading in a different currency, whether it was the Russian rubles, whether it was the Chinese yuan, whether it was euro, whether it was them coming up with a new currency. I bang on about this because it is the news headlines and what happens at those points. And this is going to show us what happens in at least the short term and then the macro picture for BTC. So just as a reminder, these were the headlines a month ago. They were extreme fear for the US dollar. I don't know if anyone wants to argue that, but they were definitely extreme fear for the US dollar late March, early April, and now we find ourselves coming up to mid-May. You've been following the channel, which I think you should, hitting that like and subscribe button. This is the macro cycle analysis that we are known for. So this was the major fear for the USD. What did we say at the time? We said that this is potentially a short-term low, or this is the chance that we get to go and test those higher prices. Of course, if you get a low, the market finds some support. Maybe it's time to go and test slightly higher prices. Just looking up here at around 103, maybe 103.5, currently sitting at 102. We had that first low on the 2nd of February, which is also a top in the other markets, a local top. But basically coming up to this news, this was where the news was most fearful, which set off my spidey senses saying that we're probably going to see a bit of a move in the US dollar. And of course, when we get a move in the US dollar, this typically puts pressure on other commodities, and of course, Bitcoin is no exception to that. Now, we can take a step back, remember what we were looking at during the peak of the US dollar hype in September of 2022. We said it at the time, nearly calling it to the exact day, although I'm not trying to get anything to the exact day. It just so happened to work out that way because of how ridiculous the news headlines were and how much the media and people who weren't even in the news headlines media were talking about the US dollar. And at that time, the US dollar was peaking and then started its major collapse. We can see it fell from 115 all the way down to 100. So a very significant collapse. Like I pointed out in the video this week, warning, crypto bloodbath, preparing Bitcoin for the next move. This one here, we're looking at major cycles on the USD. Really important stuff here to understand so that we can get a bigger picture of what's going on out in the markets and prepare ourselves for what's next. What we could see from this point is we're looking at USD to eventually continue its move to the downside based on stock market cycles, based on real estate cycles, based on economic cycles. Big stuff, 20-year cycles that we've seen happen over many, many, many decades. So in the short term, it's likely we could see some upside. We've pictured together how bearish the news was at these low prices. Remember how big those headlines were? There was a lot covering everywhere saying the US dollar is about to go down and this was the end, etc., etc. Yet look where the price is now compared to where it was back then. Almost nothing. Basically nothing in it for almost the last 2 months. So this could be that time when we start to get those higher lows and we go back up to test that 103. As I said, this is going to put a lot of pressure on commodities, Bitcoin, etc. You'll start to see those prices maybe stay steady, not move, maybe go down a little bit from there. But the same thing that happened at this low happened at the high, and eventually it'll happen again at the next significant low or high as well. So with that in mind, in the short term, with the possibility of a short-term play to the upside, that could lead Bitcoin to some lower prices. Not changing my overall macro view because of what we understand about the cycles here. So that is the first, or one of the big narratives happening at the moment. We see a down day in Bitcoin, we see an up day in the US dollar. We see a bottom on the US dollar. There's the 14th of April. We see a top on Bitcoin, the 14th of April. So there's a lot of these occurrences that you can see throughout the chart, which is probably why we're seeing a bit of a pause here for Bitcoin, like you can see on the US dollar, bit of a pause here on the US dollar before maybe it moves higher. So kind of simple stuff when we break it down like that. The other thing we broke down on this particular video was the macro cycles, where Bitcoin breaks down and where the US dollar goes up. Kind of similar areas like we could see back here. There was the peak, which was coming in through these lows as the US dollar started to break down. That was bang on the FTX collapse. And as it continued down, there goes Bitcoin, continues up from that point. So now we find ourselves at a pause, just like the US dollar, potentially coming together another point. The other big thing that is going on is the liquidity in the cryptocurrency markets. Liquidity. Everyone talks about it, saying we need more liquidity in the markets to pump the markets. In some cases, yes. Other cases, not so much. But if you start to dry up the liquidity, it becomes easier to move the markets. That's just one idea. That's how you get the pump and dumps in altcoins. Think about them releasing a few percent onto the market to retail and then being able to pump the price and then dump on the retail when you see these big gains come up. That's one way. The other thing we look at here, say for Bitcoin, is that as the volatility, which is this black area in the background, as that dries up, you typically head towards significant lower areas. It's like I did here again and again and again. So if we are drying up in liquidity, that is a sign of some sort of consolidation, and potentially, depending on what stage of the market you believe we're in, if you're on the channel, you know where we think we're at, it's potentially a sign of accumulation or reaccumulation as the market waits to see what happens next. That doesn't mean that Bitcoin holds its ground exactly at this price right here. Yes, it can come back and test some other levels, but on the grand scheme of things, the broader picture, we could be in something like this. This period right here in BTC, that was back in May, June of 2020, so May, June, July. The liquidity on the exchanges dried up that point. No one was trading, got extremely boring. That was a very, very boring period. Then all of a sudden you get a pop, another consolidation, a quick dump to test, more consolidation, market takes off. I don't think we are at the stage of this boom, but we are potentially in this sort of structure itself. So this is potentially likely that we're seeing the drying up of liquidity on exchanges as we go through an accumulation period, as the sellers, the buyers, start to figure out that there is less supply on the market, which could then cause panic later on for higher prices. What we would need to see in the charts to understand if it was going to be a pop off to the upside or to the downside is, of course, the support levels holding. So like we saw in 2020, you can see the support level continue to hold, and then it held again at a higher price. Then you get the pop off. But if you start to get this consolidation with lower highs forming, slight little breakdown, then lower highs again, then the bias has to be to the downside in that case. Whereas for now, we're still holding above that 24, 25K zone. We still have 22K in play, and we still have the 19.5K banking crisis low in play as well. So they're all going to be key levels on the chart while we go through some sort of period like this where the liquidity dries up on exchanges. But when that happens, we know for a fact that you eventually get that market pop off because the liquidity is so low on the exchanges. We know that the markets are easier to manipulate when the liquidity dries up on the exchanges. These are some of the macro cycles that we've been covering on the channel for quite some time. So if you are finding value from the content, you know what to do. Hit up that like and subscribe button down below. Now, the last chart I've got here is the monthly Bitcoin chart. We looked at the sell in May, go away narrative that's very popular at the end of April and early May for obvious reasons. And of course, right now we're seeing May as a negative month. So the conclusion that we came to on that video on the channel where we looked at this data itself is that you have to understand what is sell in May and go away. Some people look at it as just May. Others use the data that's been around for a long time where it's sell at the 1st of May and buy back at the end of October, so around the 31st. It's that 6-month period does worse than the November to April 6-month period. And others will look at key turning points within the month of May. It's something that we like to look at here. But taking a nice simple view of the market, something that we talked about in that video as we recap it just now, looking at where we currently are in the cycle. If we believe we are in that first stage of the bull market, not this end stage where the market gets this blow off top and retail joins the party and thinks that all their coins are going to make them rich, the first stage, this stage where it's still quite undecided between bears and bulls, and eventually you got to pick a direction so that you can buy or sell. If we believe we're in this first stage of these bull markets like we have been in the past, then these are the times where from May to October, we typically see the market put in gains. So going from the pink line to the white line. In each of these occasions at the beginning of the month, even they could be quite small like we saw back here in the first one here in 2019, that was quite a small gain from May to October. Nonetheless, it was still a gain. So the first 3 movements, May to October, have all been gains in the past, going from May to October in the first stage of that cycle there. So you can see each of these times, nice gains. So if we believe we're in that first stage of the bull market, then looking at history, it's possible that we get a gain. It may be small, but there will be a gain. It doesn't mean that it's going to be an easy ride there. Like we've seen in the past, there are definitely some pretty significant ups, pretty significant downs, and pretty significant boring periods. So let's keep an eye on that moving forward on the channel where we currently sit in this cycle, that whole May to October thing. Make sure you do like and subscribe. Check out the links top of the video description if you want to get some freebies on your crypto exchanges. Bitget and ByBit still giving away their $200 until next week. So get on board with that. And of course, for the Aussies, SwiftX, there is $20 of free BTC. Thank you to our channel sponsors. Guys, have a fantastic weekend if I don't see you tomorrow. Otherwise, I'll be back here next week for more Bitcoin crypto macro cycle analysis. Till then, take care and peace out.